Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. After a couple weeks of some really diverse geopolitical and macroeconomic discussion with Tori last week and Rob the week before, I figure we're just going to keep playing musical chairs here in the studio. So I brought Rob back again. Rob,
hey,
welcome back.
Glad to be here, Miles.
Good to see you, Bob.
What are we talking about, buddy?
I don't know. We were just trying to figure that out, weren't we? It's raw nerves right now.
There's no secret. Gold is stuck plus minus 2,000. Silver seems to be stuck plus minus 25. Where we're going from here, anybody's guess? There's enough happening, though. I mean, the de-dollarization continues to gain momentum, something that was put in place years ago and now is really picking up steam. The dollar is pretty much out of gas, so it's going lower. We've got a number of flashpoints around the globe, everybody knows. I mean, we go from week to week when things seem like maybe next week will be better and then something else pops up, but it's like what you and I were talking about earlier. The magician is flashing shiny thing in one hand, and what you really want to know is what's he got behind his back.
Sure. Well, and the crazy thing is the flashing shiny hand things that we're looking at are also pretty big news events as well.
They are.
You know, it's not just bread and circuses. I mean, China-Taiwan is a big issue. Obviously, Russia and Ukraine continues to be a big deal. There was a piece I just read recently about Egyptian missile production for Russia, which the U.S. ended up stepping in and offering to buy all the missiles at a higher price, or it was something like that. I'll have to look deeper into it. So there's a lot of corporate warfare taking place right now on top of traditional military warfare as well. So we've got these massive international issues. Still issues taking place in the Middle East. We've got all these massive economic and social unrest issues here in the United States. I really think people just have a raw nerve at this point. I think people are just worn out. It's been too much since, let's say, a couple years prior to COVID, during all the tumultuous back and forth during the Trump administration. Up until today, it's been 4, 5, 6 consecutive years of just people getting burned out.
Yeah, I agree.
So what are we seeing? We're seeing a very reasonable reaction to concerns going forward, like you mentioned with the U.S. dollar, and we're seeing a reasonable reaction by people looking at safe haven assets like land ownership. I got a lot of people out there that would love to buy land, love to buy real estate if the price wasn't so darn high. You know, we've got a lot of people out there lined up out the door to pick up a few extra gold or silver coins right now.
We do.
So I'm not quite sure what to make of this. I think you and I talked about this a couple weeks ago. When you feel the pulse of the gold industry, it's as busy as 2009 after the stock market crash.
Mm-hmm.
But when I look at the charts, it's still 2005, 6, or 7. Like, we haven't had that yet. We haven't had that same type of massive market move where you have the major stock market crash or housing bubble pop or interest rate market run away from us. Like, we're just right at the beginning stages of what some of those concerns could end up being. But the busyness, like the way it feels when you go home at night, definitely feels like it's already happened. So I don't know what's causing that. I'm having a hard time really putting my finger on it, unless it is just we've gotten to the point where people's nerves are kind of raw and we're all just kind of sitting waiting for the next thing the magician's going to wave his hand in front of our face about.
Yeah, I'm trying to get used to the new normal. It's been unsettling. I would expect there to be maybe a drop in the markets come June. You know, the whole sell in May, go away. I think that there is enough fatigue in the financial markets. The breadth of these indexes is not very great. There's a few companies holding the index up, like Atlas holding the world on his shoulders. But a lot of companies are struggling with their profits and their earnings. So we'll see. I mean, that may or may not affect the price of gold. It would be nice if it did. I think my opinion is I think the best market price to look for if we see a drop is around 1950. We're not far from there now because we're not in a B wave correction or a D wave correction according to Elliott wave theory. We are still in a C rise, and I do believe that that's where we are. So I don't know if gold's going to hit 2330 or 2350 by the end of May. but I don't really expect it to have a lot of downside. The dollar is out of gas, like we mentioned earlier. There's too much happening around the world. The central banks continue to aggressively buy gold like they did last year. They've been buying gold in anticipation of what is now emerging today.
Sure.
So I just don't see a lot of downside, Miles. Maybe there is. Maybe we'll see 1840. Maybe.
But is that even still downside?
No, not really.
I mean, when you're looking at the highs and lows and the way the gold market has moved up and down over the last 2 years, we're talking about a $400 sideways trading range. In the grand scheme of things, when you're looking at the full length duration of what a bull market actually looks like, and your early to mid game trading range, where we're establishing potentially the second phase of a bull market of 3 phases, being a $400 range, you're talking about gold starting at $1,200 and running up to who knows what. I had a client yesterday bring something up to me. He was listening to somebody I know we're all fans of, a guy named Jim Rickards, who I'm hoping a number of our clients know who Jim is. And David's had him on our podcast a couple times through the years. And Jim brought up a number that to the client sounded relatively astronomical. He goes, man, Jim Rickards thinks that gold could go to like $5,000 from now.
I know.
And I said, yeah, that's a big number. And he goes, that seems too high, don't you think? And I go, well, what are you paying for gas? And he goes, about $4. And I said, well, could gas go to $8? And he goes, yeah, of course it could. I'm like, not only of course could it already is in some places in California, or at least has been. So could a good loaf of bread go from $4 or $5 to $8 or $10? Of course it could. Could eggs go from $2 to $6? Wait, that already happened. Yeah. My bad. That already happened this spring. So I think you're right. I think the one important thing to think of here is that when you're talking about massive inflation piling on top of a rising interest rate, we're talking about our national cost of living average increasing dramatically.
Well, and that's what I was sharing with a client this afternoon. We're going to see $3,000 to $5,000 gold, but does that mean you've really made money? I said, it's all gold's going to do over the next 5 years is keep up with what it costs for you to put food on the table, gas in the car, and get medical care. That's what gold does. And if that means that it's $10 a gallon at the pump, if it's $200 a week to feed you, if the cost of medical care continues to rise like it does every year, all gold will do is keep up with that. So yes, on paper you'll make money, but really you're not making money. It's the dollar losing ground. And it's like I've been saying for weeks now, the best we can hope for is Jimmy Carter inflation.
Sure.
And it can go downhill from there pretty quickly.
Well, and there's another interesting thing I've thought about in that we still care, because again, we're a weekly show, so we're talking about the weekly price moves in gold, but we still care about those $50, $100 moves up and down because it's interesting to us to see how the market is reacting to the general consensus of the population. Like, what are you and me and the other 300 and some odd million of us here in this country, plus, 7 billion other people? What are all our collective decisions doing to move pricing up and down? Like, that's why I like charts. I like charts not because I like math. I like charts because it kind of gives you a snapshot of what the psychology of
the herd
market
mentality.
Is. Yeah.
That's a great point.
And what we're seeing right now is generally people, and you and I, are still concerned with day-to-day, week-to-week movements up and down, $50 here, $100 there.
Right.
Couple percent up and down. There's no better indicator that we're still in the beginning phases of a bull market than caring about the minutia. So let's care about the minutia a little bit still until it's too late. What's the thing I say sometimes? Charts are great until the bull market or the bear market takes over.
Right.
Until you get in that third phase of a bull market, charts work until then. And then you can just throw them out the window.
Right, because that parabolic market is just crazy.
So before we get into the parabolic market, we still need to get to new highs. So how do we do that? We've had a very strong move up in gold since November. We're back up to the highs. We're back up to that 2,000 mark. We're not too far away from the all-time highs. It's been a strong spring. We had that emotional reaction to the SVB sovereign bank issues that we saw, about 6 weeks ago now. And gold does appear to be catching its breath a little bit.
Yeah.
Now, catching its breath doesn't necessarily mean it's going to come down $100, but it could. And that's okay if it does. I'll gamble a little bit of money that direction that I might be able to pick some up cheaper. But other than that, it's like I'm still buying every 2 weeks because I don't care.
Right. I don't like it, but I don't care.
So I'm looking at the chart here. We've put in 2 back-to-back tops right now here since the beginning of March. There's something gold could do here. You and I talked about the 200-day moving average. It's down in the low 1800s. That's a really nice lineup with your 618 fib, which is also down in the low 1800s, maybe to high 1700s. So could we see a little bit of a pullback here? Sure. But you want to talk bear market? You're talking gold in the 1500s. We're not even close to being anything but just a short break in a bull market.
Right. And if that happens, though, Miles, it's only going to matter for a few days. The demand is so strong. We have so much money coming into us right now. The availability of product is getting less and less and less. It's just relentless. It's not stopping.
No, it's not slowing down at all, and that's nationwide. The appetite for, say, silver American Eagles has gotten worse, not better, in the last couple weeks.
Appetite for bags of junk silver has gotten worse, not better.
Yeah.
Appetite for fractional coins has gotten worse and not better.
So availability of product, while in the right product, is still fine. But in the things that most people run to first, that's already starting to dry up.
Yeah.
And that makes me a little bit nervous for what's going to be available when things actually get moving here.
It won't be.
So we move over to silver. I mentioned silver American Eagles. Now, silver is interesting. I think gold may be at sort of a potential turning point here. We could see that $50 drop. We could see that $100 drop. That's fine. Blow off a little steam amidst a $250+ rise over a few months. Silver, on the other hand, just had a breakout move a couple weeks ago. It broke out of a declining top-end trend line. It's come back down and touched it. And I brought this up last week with Tori. I think there's a shot silver pushes up into the 27s.
That would be cool. That doesn't sound like much, but that's a number.
Well, just since March, that's going from 20 to 27.
Mm-hmm.
That's like a, 28% rise?
Yeah.
More than that?
Just since
35% rise just since March. So sure, silver could come back down, and there's a couple spots down here, maybe in the 21, 22 range where you could see a little bit of a pullback. But silver really could put a couple more dollars on the board before it finds a little interim top. And now we're into breakout positions in silver. Now we're pushing above the 2022 highs, and there's nothing between there and 30.
No.
And now we're back to COVID highs. And now all of a sudden, silver's playing catch up with gold, and that can happen pretty quickly.
It can happen, yeah, very quickly.
So platinum, I do want to bring up platinum this week just because platinum did come up to a high we talked about. We talked about platinum probably moving into the 1150, 1160 range. It got just below it, got to about 1148 and had a very big turnaround back down. I think platinum may have turned. So where gold, I'm 50-50 on. Where silver, I think actually still have a little bit more room, even just on this move before we sell in May and go away. Platinum had a nice move up, and I think platinum could take a little bit of a decline here.
But in defense of platinum, we're only about $400 away from palladium. There for the longest time, it was $1,000 to $1,500 difference.
Yeah.
So platinum has really narrowed the gap with palladium.
Yeah, the platinum-palladium ratio, we know a number of our clients have picked up a little bit of platinum over the last few years that we've been recommending. Not huge positions.
Right.
Because I think it's important to remember, why do we buy gold in the first place? What's the main reasons to own gold? Those were the things you brought up a second ago.
Yeah.
But if you can squeeze out a little bit of investment return out of something like a long-term ratio play between prices that's way out of whack, that tends to work out pretty well.
It does. It can.
So I like what gold is doing. It's making this rising channel. I think there's a decent shot that it breaks below the channel, takes a little bit of a pullback before it keeps going, but it sure doesn't have to.
No, it really doesn't. And I'm taking the other side of that. I think 1950 is about as good as we can hope for.
Well, and that's what happened a few months ago.
Yeah.
If you look at the chart a couple months ago, we saw a very similar pattern, and it didn't break down.
No.
It took another big jump up. So, yeah, at this point, I think consistent investing, consistent savings in precious metals really is the safest option.
Yeah.
Because when gold's $5,000, you're not going to care.
Not going to care
What's
at all.
$50 now? I don't care. Silver might have a little bit to go. And platinum, I think, might be turning around a little bit.
We'll see.
So
Yeah.
we'll see if we have a little divergence in the metals. You guys can hold me accountable to that over the next couple weeks in the notes. And moving over, you already mentioned the dollar. So let's take a quick look at the dollar. I don't have anything to say you already didn't. Dollar's running out of gas. I don't know what the U.S. economy can do to convince other nations to keep buying our treasury bills. I mean, for Pete's sake, they're worth like 10 times what they used to be just a year ago. But the international hunger for U.S. dollars is
abating.
Not what it was.
It is
previously.
Declining. Yeah.
Especially with where interest rates are. So we'll have to see. You've got a breakdown point in the U.S. dollar about 101. It goes below 101, it's going below 100, and then I think you're down into the low to mid 90s at least if we see the dollar drop here, regardless of what they do with interest rates, regardless of what yields go to. People aren't buying treasury bills.
No. I mean, the banks did for a while as they were trying to bolster, but yeah, that's fading.
Sure. Well, the central bank can always buy their own treasury bills.
Sure they can.
We've tried that before. So to the tune of, what is it, $8.5 trillion at the central bank balance sheet right now? I know I looked at it a week ago. I think it's about $8.5 trillion.
Yeah, it dropped like a rock. The balance sheet rallied way up again and then is dropping again. So it's going back and forth. There's a lot of volatility in the balance sheet that people are not used to seeing.
Right. Well, it's because we've only ever gone one direction before.
I know.
So trying to tweak it back down is difficult. In fact, the only time I knew of that they've tried to lower the balance sheet was during kind of the tail end of the Trump era there, around like year 3, when things were going pretty well and they were trying to tail back down the central bank balance sheet because of some of the overnight lending rate stuff that we talked about 4 years ago. That hasn't gone away either. Maybe that's another discussion we can have. But I think a lot of that has to do with what we're seeing in the dollar. And then finally, I like to look at the Dow. I know you're more of a broader market sort of S&P guy. I'm seeing breakout movement down on the Dow. I think the Dow topped out. The Dow had a nice little bounce that started back in like October of last year, came back up about 2/3 of the decline, never put in a higher high, continually put in lower lows. And I think the turn we just had here this past week in the Dow, I think the Dow's down 5,000 points before it makes another bounce. I think it's going to be a really ugly summer for the stock market. So that's kind of our snapshot at charts this week. I will just ask Rob, again, because I always do like to fall back on your experience and the conversations you have with your clients and all. You made a joke when we were walking in here. You said it's a different thing every week. So What's the thing this week? What's the trigger that's getting people's attention? What's the conversation you're having over and over this week?
Well, that's different. The trigger this week, though, was Tucker Carlson being fired from Fox. That's got everybody's attention. But the thing that people keep going back to is, when is the central bank digital currency coming into effect? And they're hearing all kinds of rumors on the internet. Get your money out of the bank by May 1st. It's all going to crash. And it's like, really? Why do people do this? Why are these guys out there trying to scare people?
Well, they're selling something.
They obviously are. And one of these days, it's all going to add up and things are going to break, but it's not going to happen on May 1st.
Probably not. Could. I guess it could. I mean, it's got to happen on some day. One day you could own gold coins in 1933 and the next day you couldn't.
Well, and we're going to see that. We're going to run out like we did back 10, 12 years ago, where we didn't even have Krugerrands for sale. We had 1 kilo bar per customer per day. That was our allotment.
Yeah, and that's not even bread lines.
No.
That's just free market trading availability.
No, we are coming to a point, and I don't know when, where gold will disappear. The bad money will drive out the good money.
Imagine a world where the government doesn't even need to confiscate gold. We just confiscate it ourselves.
Yeah, well, we can buy it all.
Yeah, exactly. So, and that's the thing I do love, because I obviously don't want to make light of it, but I know a lot of our listeners, probably most, if not all of our listeners, you're not listening to the show if you're not already a gold buyer.
Yeah.
I can't imagine. If you're not already a gold buyer and you're starting to listen to shows like this and do your research, that's fantastic. You do want to make sure you're getting educated. So you do want to make sure you're working with people that put the education above everything else. And we certainly try to do that to the best of our abilities around here as well. So I know Rob, myself, any of the other advisors here, if you do got questions about your own portfolio or you are looking at getting started in precious metals, we're happy to take the time to talk through that with you. The only thing we ask in the end is if you do decide to do some business, consider doing it with us. That's it. So I guess with that said, at a week where we may be seeing some turning around in a couple different markets, it's going to be an interesting 7 or 10 days here.
Mm-hmm.
So we'll have to see how this plays out now, because I think we're at some breaking points in a couple markets. And I'll be interested to see what, say, sell in May goes away ends up looking like.
Yeah, let's watch.
So that's going to do it this week for Golden Rule Radio. If you liked what you heard, hit the subscribe button, ring the bell. And to the guys that brought it up in the comments, you were correct. I did quote the film Prometheus last week, so thank you for that. If you want to talk to Rob, myself, or any of the advisors here at McIlvaney Precious Metals, we can be reached at 800-525-9556. You can find us on our website, McIlvaney.com. We're on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks for listening and have a great week.